Is fear driving this metals rally, or is it greed? Hi, everyone. Welcome to the Market House. I'm Maggie Lake, and today I'm talking markets with Tony Greer, founder of GG Macro. Hey, Tony, how you doing?
Maggie, how are you doing today?
I'm doing good. I have a feeling probably a little of both in that answer, but I'm super excited. Listen, talk about timing. I'm watching all these parabolic moves in the market, and I'm so excited to have you on today. I think a lot of people have been texting and posting on X and in the chat already saying, I can't wait to hear from you because I know you have a lot of experience watching these kind of moves. But I got to say, I'm also so excited that we're going to be in Nashville together this month because I don't know, I've been talking to a lot of people and it feels like we're at a really important inflection point. And I can't wait to hear what Grant Williams and Brent Johnson and Doomberg and everyone has to say about this. So like luck or not, great timing on that.
Yeah, the inflection point. I get that from a lot of my clients, like everybody wants to know what direction, what student body direction we're going in this year. Everybody feels the regime change. Yeah. And I feel like not everybody has the tools to analyze it, perhaps, or the history with markets to be able to analyze it, perhaps, or something like that. Yeah. And so that's where we come in handy doing this job for the last 10 years. You know what I mean? And with the experience that we had before that, trading the metals, stocks, metals, commodities, et cetera, et cetera.
Yeah.
So, so there's a lot going on there.
So talk to me a little bit about what and I think we're gonna flip back and forth to this because I think this is like when experience really matters, and there's a lot that makes me nervous, but I know there's a lot of opportunity here too. So we'll try to thread that throughout, but we got to start with silver and the metals because I mean, every time I blink and I look, I'm silver up another 8% today, gold at new highs. It's been a long time since we've seen these kind of price movements. How are you feeling about what's happening?
Well, always trying to figure out what's driving it, right? And there's a lot of factors in motion. First of all, it's a raging bull market. We can just stop there and hang up the conversation, right? Because those go on for all different kinds of reasons. I think what we've got going on that's forcing silver to new highs is mercantile exchange raises margins again, right? It's a flat percentage now of your position. So they kind of shaved it a little bit, and that's going to cause shorts to have to cover because they don't want to put up more collateral. So you've got a little bit of that going on. You've got people looking across the Atlantic to Iran, right? That it looks like there's a combusting situation going on over there. It's combusting because the media doesn't dare say a word about it, right? You have the bifurcation of the bullshit story that the media is trying to get everybody to believe, and then what you're learning through the news on your phone, which is probably a lot closer to the truth, right? We're just in that period of history. So with that kind of stuff going on, it doesn't shock me to look at, I've always been obsessed with the year-to-date leaderboard, right? And I always, I guess my superpower, or what I try to accomplish, is to have my clients in all the winning sectors at the end of the year. And it takes a while to get that sorted out. But I feel like we had a leg up this year coming into the start of the year with the right stuff on, right? We managed to get into industrial miners, gold miners. We've been in precious metals for a while, but being in those for the start of the year has been rewarding. And it's one of those things that you have to, number one, perceive the signal. Number two, not get excited that you're right, because it can still all go wrong tomorrow. But number three, if you're getting the signals that are telling you that you're right, you better take the chances to step on the gas at some point during that trade, because it doesn't matter how good of a trader you really are. It's how much money you make when you're right. So every trader worth
important. So one thing we hear all the time is that I got out too early. But you also don't want to be trapped if it feels like this is on, thin air. So it sounds like you're letting these positions run, that you think there's more upside, even though these gains are sort of exponential that we're seeing. Do we pull back at all here?
Yeah, I was thinking in the mid 50s in silver that sentiment was getting absurd, right? All the silver bulls, to their detriment, they have to cheer every new handle like they're 5 years old. I don't care which one it is. You can name any one of them out there. They're all guilty of it, right? It tends to throw a crooked sentiment signal, right? Maybe a sentiment signal that where you think it's all overheated sentiment, but it's really not. And the reality is that the mechanics of this market are silver is on its way to a new destination, and whether I like that or not, it doesn't matter. That's what the tape is saying, right? It's constantly higher auctions, new highs, new high prices. It's trending to a new level that it hasn't found yet. So luckily while we haven't been one of those chest beating silver bulls, you know what I mean? We're just kind of watching the developments. The rally is getting steadier and it's doing things that typical bull markets do. What do typical bull markets do? They form a double top and then they blast through it a week later. They have an outside reversal day and then they make a new high the week later. You know what I mean? They just throw topping signals they just buck them right off their back fast. So when you see silver start doing that, you have to adjust, and that's when you respect it and say, yeah, this thing's going to another zip code, and we haven't gotten there yet. We're in the car driving there. We've got the tunes cranking, but we have not gotten to the place where we're going to pull over and take a rest yet. Yeah. That's how I'm looking at it, Maggie. Gold is doing the same thing. Gold is, you can call it whatever you want, call it puts on irresponsible government behavior. You can call it puts on irresponsible central banking. You can call it, safety insurance, a flight to safety insurance kind of thing where you have Iran bubbling and you see gold go right to the highs. Like none of that should shock anybody. So, with that going on, I just sit here and say we are in a bull market that is going to work this year just like it worked last year. That's really what I think. We're getting a confirmation. Look at the leaderboard like I'm saying, like this is why I don't take my eye off of this thing from day one, because this is the most exciting race in all the land to me. We've got double. First of all, silver's up 30%. It's January 14th.
I mean, just let that sink in for a second. Since January 14th.
We're 2 weeks into the year, silver's up 30%, right? So it's going to make another statement this year, like up 100 and something or whatever. We don't know what. But look at the rest of the leaderboard. We've got at the top, uranium miners, industrial miners, oil services all of a sudden elbowing their way into the leadership pack among gold miners and aerospace and defense, right? Which is just taken off and gone since we plucked Maduro out of Caracas in a sweatsuit. So all of this stuff, this is just like signal and not noise to me when you're kind of expecting this to happen and you turn the calendar into the year and there's going to be beginning of the year allocation and there's still a chance that that's what we're seeing and then we see a pullback. But I'm still in the mode that these bull markets are healthy and the dip is going to be bought, that kind of thing. So
does it feel like it's widening out to the rest of the commodity space?
Yeah, well, so that's the thing is that crude oil all of a sudden in 6 days has gone from its 25-day moving average through the 50-day, through the 100-day, and we're testing the 200-day. You got that sit up in your chair behavior for any oil trader in the world, right? When you look in the rearview mirror in oil, we just had the most bearish set of headlines that we could have had. Venezuelan oil, it's ours now, and we're selling it into the market. It's like, oh my God, this is Trump getting gas to $1 a gallon or whatever he's trying to do. Whatever he's trying to do, this is it, right? Telling everybody we've got Venezuelan oil that's going to be sold onto the market. Oil does these little dip and dunks to the lows and then turns around and rallies. So when you've got that negative headline set that doesn't cause a breakdown into this week where all of a sudden oil is kind of scooting right to moving average resistance levels, that's when you're saying to yourself, maybe now is oil's turn in the baton race. Maybe oil just got the baton in the commodity bull market, right? I've been talking about it. If you got to remember that silver, when gold was breaking out to new highs, silver was $35 an ounce. Nobody cared for quite a while, right? And we were looking at it going, look at this, gold has gone berserk and nobody gives a flying shit about silver at $35 an ounce. Well, I'm not going to buy it either because nobody cares. Next thing you know, it's a triple, right? So things happen really fast. But what I'm obsessed with, Maggie, also at the bottom of the leaderboard, if you're a tech investor, you've got to be quaking in your boots right now. The bottom of the leaderboard is software, cloud storage, internet, cybersecurity, and now financials with Trump capping interest rates, all negative year to date. So you start to see, like, is this the rotation where everybody in the world says, I think we have too much tech, right? We've been buying tech for 5 years and it hasn't dipped once. Maybe this is where people want to sell some tech to buy some more platinum palladium, or they want to sell some tech to get in on this copper rally at all-time highs and say, what happens if we have this huge copper shortage? Has anybody thought of that, right? And now all of a sudden, while it wasn't on anybody's mind at LME copper 9K, at LME 13K, everybody's like, wow, we might have a problem on our hands.
Yeah.
So there's a lot to think about. There's a lot of money and hot air going into and around this market, but it's a bull market that's going to be with us. That I have confidence in, right? We're going to ride the volatility, and we're going to stay bullish, and we're going to buy the dips, and we're going to make the money.
Hey, everybody in the chat on Substack and YouTube. Great to see you. We have folks we did a poll, and half and half. Did you buy silver? So half have exposure to silver, half don't. If you don't, Tony, is it too late?
Never too late, Maggie. Never too late. Bull markets, I'll always preach it to anybody that listens. A trader's two most ferocious tools are patience and time. And in a bull market, things are happening so fast that it just makes you feel like you miss it. And the reality is just that price is outperforming expectations, so nobody can really get a handle on what's going on. What's going to happen is, like anything else, silver is going to get ahead of itself, and it's going to come plunging back to some kind of level of support, and everybody's going to be throwing in the towel on it. That's when you're going to get a chance to buy silver. And I don't know, unfortunately, if it's the first quarter, second quarter, or fourth quarter of 26. And if it's the fourth quarter, as a trader, you got to say, great, patience and time was on my side. The fourth quarter is when I have dry powder for the silver trade for, and here comes silver hurling to the bid that I'm putting out there, right? We're going to get that. It's just not a question of it. So we're going to be chasing it for a little while. We're going to be behind on performance if we're not in it. And when silver presents itself and, there's an exit moment for somebody and it dips to the bottom of the channel, which is now down at like $60, $70, that's when you're going to get your chance. And then you're going to have to buy it and then manage the risk.
Yeah. I think that's great advice. And listen, if there's distress somewhere, people sell their winners too, right? And so, maybe that's the trigger for.
We just saw the ultimate winner sale in October of last year when that Bitcoin whale saw Bitcoin try to go through 125K 6 times and fail. Right. That there's a trader on the other end of that decision. I don't care why he bought Bitcoin, but he's looking at that chart going, this top is not going to be overcome anytime soon. And I don't want however many $1 billion worth of Bitcoin I have. So let's diversify. Right. $9 billion is going into something.
Maybe silver. Who knows?
Oh, I'm sure he bought silver with it. Are you kidding me? That trader knows what he's doing.
Which is funny to think about. Doug saying, Tony, uranium is also making a move. Are you bullish the metal? Will it hit an all-time high?
I can't, I've got all this, there's bullish tailwinds in the commodity space right now. If you want to be in the performing assets, you got to figure out how to get into Bitcoin. Into the commodity space. And I'm thinking BCom and I'm saying Bloomberg, Bitcoin. I'm sorry. But Maggie, that's the big chart that we've been looking at that had a 4-year cupping bottom base, and we're now breaking out of the flat top. So within the realm of everybody chasing down commodity exposure from first base, like nobody had it on. And now people you can see are finally putting commodity exposure on. Is this the big allocation when mutual funds go from 50 basis points worth of metals exposure to 1%? I don't know. It might be the very beginning of it, but it's definitely not the end of that. So people are starting to get into these sectors. Yeah, you can stay bullish uranium. Anything that's got, a deficit out on a horizon 4 or 5 years like uranium has, it's easy to stay bullish. It's also easy to mistime the trade. Yeah. And get sucked into the story at the highs and have it come crashing down on you. That seems to be that's a feature, not a bug of the uranium mining market. So yeah, you got to be careful, but I'm bullish as well. There's not going to be a commodity that's going to get left out if this whole rotation happens. Just like there's not going to be a sector of tech that's not going to get sold. There's not going to be a vertical in commodities that's not going to get bought. I won't be shocked when they start buying grains. You know what I mean? And that'll be nowhere at the end of the cycle because grains have been in a downtrend for a couple of years now.
We had a question about grains, so great that you brought that up. Is this with uranium? Is it a time frame issue? Because we know the dynamics. Again, we'll talk to Doomberg more about this down in Nashville. But if you're a trader, so you're really thinking about this pattern that you've seen. But if you're a long-term investor and you're looking at the larger energy story, is that where patience and a longer time horizon perhaps helps when it comes to uranium?
Well, that's the one that's kept you in it, right? If you can weather the mispositioned shakeouts on the downside is actually, the answer there, Maggie, there's nothing fancy. It's the people that have been right about uranium for a long time. And like I've always said, this is not my trade, right? When uranium was down in a hole, 3-4 years ago, I had 20 guys DMing me, telling me about uranium. And I'm looking at it. I'm like this, I'm staring at it and nothing is moving. And you're like, okay, I hear you and I hope it works, but it doesn't fit my perspective for things to buy. So when it does, I'll call you for help, and God bless them all for being right? Like they deserve the win on this trade. And it just seems like to me that we're going to get continued tailwinds out of the administration. And I think that'll be helpful. They just committed like $2.5 billion over the next 10 years. And I just got a feeling that there's more where that came from, right? We're going to get to that stage where there's more uranium partnerships with utilities and things like that. Then the whole energy landscape is going to change in the U.S. So we got to kind of keep our eyes peeled and see which the winners are going to be. Uranium is certainly teed up to be in that portfolio.
Yeah. It's great we're talking about this. Just a heads up for all of you that are interested in this. The For the Record, our latest For the Record is coming out on Thursday, and it's with Jed Dorsheimer, who leads the energy group at William Blair. And really interesting conversation about really energy being the center of the economic universe and what the investing implications are for that. Again, maybe less of a trader perspective, more of an investment thesis. So if you're interested in that, check it out. It was a really great conversation. Tony, we're getting a lot of questions about nat gas, because as we're talking about commodities and energy, it's like talk about the outlier and the laggard.
Yeah. I put it this way. Natural gas is not something that you want to mess with, Maggie. I mean, that thing, it changed the face of the whole commodity complex in November when it ran from $4 to $5.50. And then it just turned around and dumped to $3. Right. So I look at that thing and I'm like, I'm scared. Right. That thing is not a potential trading vehicle. That thing is, what I think that is now? I hope it stays dirt cheap because it's bullish industrials. And I got enough of those on the pad to figure out how to make money here. You know what I mean? Like, I'm not going to sit here and try to mastermind natural gas. I'm not going to say that it's a buy on the dip. The thing just came down from $5 through $3.50 to $3. It looks like it's going to zero, right? I don't know what else to tell you. So I don't have a handle on that, and I can't predict what's going to happen there. At this point, I'm just rooting for it to be a continued cheap input to the base load power energy complex here in the U.S. And the cheaper that goes, the more they'll use that for AI data centers.
Yeah. That's it. That's a great way to think about it. If you can't figure out the answer, and I know why everyone's asking, and again, I talked about this with Jed, because and Doomberg has said this for a long time, it is the natural sort of bridge to get us to energy, and we're in a resource scarce environment. The whole macro thing lines up, but that has just not jumped on. And so great way to think about it as like, in the interim, let me think about what I can do with the fact that it's low.
Think about what would happen to you if you decided to pile into natural gas. You know what I mean? Like, you had a lot of risk on your hands, and then it really wasn't a pleasant trip to get out. You know what I mean? Like, you got pretty much wiped out unless you traded it really, really smartly. And that's why when I look at that chart that says, I would have got in here and expected a rally, and then it got mashed in my face, man, that could have been an expensive one. And I'm glad I missed that boat.
Yeah. Yeah. And this is the thing about commodities, right? They can have, as parabolic as they are on the way up, the way down can be brutal.
Yeah, that's it, man. And who knows where we are in that cycle with, gold, silver, platinum, all of it. But it still does, to me, I mean, with the way the auctions are going consecutively higher in these metals, it feels like this is real money being put to work. The part of it is obviously there's a little bit of future short covering with that margin raise, but I don't think that tells the whole story. You know what I mean? Shorts get out eventually. They don't ride things forever. And so you can't tell me that like there's still shorts from $5 in silver. I just won't believe that. So we'll see what happens. We'll see what happens, Mag. But at least we've got a great story to tell. right, this year. And like the rotation already is commodities up and gone. Like oil just woke up. Oil services are in the mix. There's an interesting tell to me where home builders and home construction are all of a sudden quietly up 10%. And yeah, exactly. And that's with rates really not going much lower. So I'm just wondering if that's kind of telegraphing something else that Trump is going to do. And I think that's going to be a lot of your risk if you're a bearish trader trading things from the short side, is that, just recently Trump came out and pulled about 5 cards on the table for Main Street. He capped credit card rates. Robert Kennedy Jr. turned over the food pyramid. We're down to 11 mandatory vaccines from 72. Trump said the consumer is not going to have to pay for the rise in energy prices due to the AI power generator, right? Like he's coming to bat for Main Street all out of the blue. And the commodities and sectors are responding accordingly. And so it's like one of those things, if you're short and Trump is out going on a run, you better have a plan.
Yeah, it's so interesting because I think you just brought up one of the real risks in this environment is that it's a very different political landscape. It's a very interventionist administration. And then there's the headline, and then what happens and what does it really mean? Like that's a big triangle. And sometimes it's not so obvious at the beginning. We're still waiting, by the way, for those of you who might not be in the US, we're still waiting for the Supreme Court decision on tariffs. A lot of people surprised it didn't come again today, but we're watching for that. So there is a lot of headline risk in this environment.
I have an angle on that, Maggie.
What's that?
If you want to hear it. So we don't have the decision on the Supreme Court versus Trump yet, right? What we do have is a Trump tweet basically daring them to overturn the tariffs, right? Saying this is going to be a total mess if they turn up, if they do the tariffs. Right? Oh, I got a better one. If I wind up, forget about it. But my point is, Polymarket has had the Supreme Court at like above 65, 70% to turn down the tariffs for the last several weeks. Everybody knows that. The market knows that. My view is just that if this was going to be something that could binarily completely overturn all of Trump's tariffs, I think the S&P would be 6,700 offered. And it's 69.60 bid on the close. It rallied 40 handles into the bell because it seems like everybody, not everybody. There's a short contingent out there thinking that this is going to knock Trump, set him back on his heels. It's going to knock the market over. Everything that he just did is going to come undone. And with the existence of Polymarket today and the stock market being a future forward-looking market, I think it's price. I think some kind of amenable solution is kind of priced in.
Yeah, no, I would
not
agree
a
with
disaster.
you. There's been time to adjust, and we know they'll just go country by country. So it's like unclear that it's going to be some big sort of like, I agree with that.
There's no tsunami coming, I don't think.
Yeah, I think that
you wake up and the S&P's down 400, like no way.
Not to say that you may not see some knee-jerk reaction, but I think a lot of that has already been priced in. Yeah. Good question coming from Boris, which is, if you take profits in metals, where would you invest into? And I'm just going to point out that we have this other dynamic we haven't talked about, which is that we had the NASDAQ getting hit again today, but you had the Russell up, small caps up. I don't know if that's a trend, but I know it's something people are wondering. If you get small caps finally participating, and if you do, is that a sign that you're close to a blow off top?
So without being too much of a wise guy, if I take profits in metals, I'm looking to reinvest them in metals. I'm literally looking to say, like, I've sold a tiny portion of my XME into this rally because it's blasting away from the 200-day moving average, and I was upsized for a portion of this trade. Right. I mean, I wrote about it for months. I think that turn of the year, we're going to see this, and we got this. So I was upsized for that. And so now into this XME rally, I can get back to regular size. Right. My point is, I guess, with the money that comes out of here, I'm looking to get back into XME with that money. If XME doesn't give me the chance, I'm going to get that money into GDX. And if GDX doesn't give me a chance, I'm going to put it into OIH because it looks cute right now. And it looks like it's going to do something. So like, if you want to make me rotate into another sector, I'd say oil looks like it might be a better bet. XLE just woke up, and XLE is another, exploration production ETF. That's another ETF that has been consolidating for half a decade. And when that mother scratcher breaks out, it's going to rally for half a decade. And we're right to the top of the range here with oil at 62. So oil goes to 75. This thing is gone, and it breaks out of a range that it's been in since, good grief. Let me call it up here. It breaks out of a range that it's been in since, call it 2021.
Okay, so interesting question from Dave. Why oil when all the talk is about a supply glut?
Because markets go that way. You know what happens to supply gluts? People that want risk on the pad buy the glut from the people that are saying, hey, we got all this oil over here. And somebody makes a decision and says, I'm not smart enough to know how, but just say the economy does a lot better than we thought, and there's not as much oil sitting around in a month. Then where's the price if I want to buy all the oil?
Yeah.
It's not here, so I got to buy it right here if I want to buy it, right? If it did, this is the value play right here, and it seems like you got a pretty good stop loss if you're buying a speculative position. You can risk the recent low.
Yeah,
So,
and Dave, some people, including Dale last week, he'll talk about it again on Friday, pointing out that there's a very low probability of disruptions in the Strait of Hormuz when you have what's going on in Iran, and that seems like maybe a risk worth taking. So if you get a disruption, it doesn't take much to call into question, at least short term, that supply glut, because it's not the supply, it's the transit, like the supply chain that it is more fragile, I think, than the supply. So that may be a little bit of an explanation from a fundamental point of view what's going on. But as Tony said, a lot of this is also based on price. WTI, higher lows. It's been marching to sort of making higher lows. And so for a lot of people, that's a trigger.
absolutely, Maggie.
Tony, the VIX looked like it perked up a little today. I mean, still very historically low, but 10% at one point this morning.
The VIX is respecting that there is going to be volatility with the Supreme Court decision. I think that's totally fair. I mean, with the headlines that we've been through, there's a lot of world changing stuff. Like, we're in the middle of a regime change administration. He just threw 5 curveballs at the market, right? All of a sudden, he reschedules cannabis. It goes up and straight down. He says he's capping credit card rates. Financials get repriced. The banks and things like that get repriced lower. He makes another headline. This is going higher. So volatility is like, yeah, man, being long options, you can probably realize the volatility if you're long a put, long a call, whatever it is, man, things are firing all over the place. So that translates to me, like, whenever I see, there's literally a scatter rotation, like minor rotation, that it's been taking me like 2 or 3 days to figure out, like, what is this going on here? Is that going to work? Where is that leave financials? Are they still in a bull market? And
what about financials, Tony? Because bank earnings, I don't want to wrap before we talk bank. Earnings season started, banks first out of the gate. The news seemed pretty good, but the shares are down.
Yeah, this is I think that getting long financials, I saw a great headline that it's going to be really bullish for like Goldman Sachs and JP Morgan once all their AI gets applied to investment banking and their trading policies and this and that. And they may have a slightly smaller headcount and a smaller footprint over the next few years as AI creeps into their platforms, but they are going to be supremely profitable after that. And you're like, wow, that's a real idea, man. Like, I remember what it was like working at Goldman Sachs and knowing that you were running ahead of the pack the whole time. Now give them this AI tool with all the information that they have. I mean, that's a powerful thing. And I think it explains why Goldman was jumping out of the gym for the last couple of months. So they ran into a bearish headline for the financial sector. Is Goldman Sachs going to get crushed if we cap interest rates? No, but the credit card banks are going to get crushed. And that's going to be a whole reset of the sector. So I think that's what's going on. I don't think any of this derails the bull market. You know what I mean? Like, if you were sitting there waiting to buy financials, now's your chance. You know what I mean? Just like the same way if you're sitting there buying silver and it gets repriced into the bottom of the channel that it's surfing higher, stick the bid in, manage the risks, darling. That's what the market's there for.
Yeah. And maybe be a little, as we've been talking about in this environment, maybe be a little selective and nuanced, right? You make a great point about investment banks. They're not really exposed to some of the headlines coming around government intervention when it comes to Main Street programs. And there's a headline, Citi's M&A fee haul surged 84%, record deal making year. And I think a lot of people are going to continue that. So you might want to look at the area of business those financials operate in.
And I love the fact that David Sachs on the All In podcast, who is Trump's crypto and AI czar, he is mad bullish the IPO market in 2026. And man, we haven't had a hot IPO market in years, Maggie. And if you remember what that is like sentiment signals on steroids, because there'll be a hot IPO that comes out. The S&P will come out up 1% and open up 1.25%.
Yeah.
Right. The whole index. Why? Because this is exciting.
Yeah.
This trade is exciting.
I used to be down at the floor when those IPOs were.
Yeah. Oh my God. I mean, it was literally
giving out swag. I mean, it was like
New Year's Eve. Every IPO is a mini New Year's Eve on the floor. So, you know, that'll be a level of, that's when you'll see CNN Fear and Greed pinned in extreme greed. Yeah. And it'll be with the S&P going vertical for a couple of days. And you'll be saying, I wonder when this is going to stop.
Yeah. Run it hot. Right. Real quick before we go, question about Bitcoin and Ripple. Are you looking at crypto? Is that on your book at all?
Yeah. I bought the dip at 82K, Maggie, on the pad. We put the bid out ahead of time before it collapsed. I just got diligent with some charting and said, okay, how about here? We'll buy some Bitcoin. And we got it $2,000 off the low of the move. As I said to my Slack group members, when it got above the 50K, even though above the 50-day moving average at like 88K, I didn't love the price action, but that is an emotionless add to the position. So I added a little bit more Bitcoin. I didn't have the biggest position, I'll be honest with you, but I added to it, and now I'm getting rewarded for that. And for me, I was looking to catch that bottom and trade the retracement back up to 100K. So in between here, somewhere in a 106, I'm a seller and I will be out. And if Bitcoin continues on from there, God bless it. That's great. You know what I mean? We had a 25% trade in a month, and that's all I care about. My job is done here.
Yeah. Paul says, I have to talk about this comment. TG is the Usain Bolt of traders. I love it. There's no out of the starting block, no slowing down, which I love. Awesome. Tony, you mentioned your Slack channel, and in all seriousness, there's a lot. These are big moves. We talked about it earlier. It feels like it's an inflection point. You know, it's been many years since people traded anything but a straight up bull market in equities. Most people were in equities for a long time. What are you getting in terms of incoming? I worry about the momentum and people jumping on and just getting slaughtered in some of this action. I mean, you can make a lot of money, but there's a lot of risk when it's moving this fast. What are you hearing on the incoming?
Look, there's the cool part about having a business in this industry is that you feel the impulse of the client demand and the draw, right? So we've had several people step up to the Sailor's Deck product in TG Macro, right? That's the product that's my most expensive product. It costs $5,000 a year, but what it gets you is 30-minute session per month. One-on-one, we talk about risk management or we talk about the markets, right? Half the people, there's been a rise in subscribers to that package lately. I spend a lot of my day on the phone and on calls just like this with other investors and traders. Everybody wants the same thing. They want hand holding in the metals markets. They're starting to see the light. This looks like where to be. And they want to help figure out what the administration means. And I think that because that's what I've been preaching, that's why they're stepping up. And they were like, okay, I need you to talk about what you wrote about this morning today. I want to understand that better. And how do I manage the risk on this thing that I bought here? And you know what I mean? And it's like, just relax.
Yeah.
Just relax. This is nothing we haven't seen before. But,
well, it's nothing. It's stuff you've seen before. But I think especially when it comes to commodities, this is not something that most of us have had exposure to. So I can understand why people are sort of stressed out about it.
That's true. That's true. But to go one more length, like this is with the people what the people are doing by signing up for that. They're doing the same thing that I'm doing, throwing this conference, Maggie.
Yeah.
Right. We're throwing this conference down in Nashville. The people that are coming to it are the people that I request 30-minute sessions with every once in a while. Right. Like, I want to understand energy. Doomberg, I need you for a half hour this afternoon so I can pick your brain.
Yeah.
You know what I mean? If I'm going to put on something that has to do with that I have interest rate risk, I call JD because I have to know what he thinks of the bond market. He's a way better bond trader than me.
Yeah.
So that's what this is kind of like, one of the things in markets is, take a partner. It's a lonely job. So when you take a partner and you have a sounding board and you have somebody to bounce things off of, or you have somebody bouncing things off of your sounding board, there's a lot of synergy there. Like, that's where the value of being on a trading desk was for the entire 90s. You know what I mean? And those communication networks have all been chopped to bits.
Yeah.
So what's cool is that I feel within TG Macro, I'm organically rebuilding a lot of those sort of client to broker conversations, client to manager conversations, and people are getting a lot out of it because you can, it's kind of like, why is the Joe Rogan show better than reading a tweet? Well, you can get all the nuance you want out in 2.5 hours, right? And so some people are looking for that. That's
I think it's so true, because the first 2 weeks of this year have been insane, and I've been having a boatload of conversations, and it's given me so much to think about. And I'm actually going to do a Substack for you guys, Reporter's Notebook Substack, just pulling together some of the threads. But you're right. Yeah. It's like, it's a lot more dynamic. But I think this is a time when we all have to make sure that we're really plugged in, because things are just moving so fast, and people need to kind of protect, if you've been right and in the right trade, you want to protect that. So I think it's really important for folks who have experience to share that. Yeah. A great chat, everybody. Thank you for being so active and participating, and sharing while we're on air. Appreciate it. Tony, always great to catch up with you. I'm actually talking to Doomberg a little bit later in the month, so it'll be really interesting to hear what he thinks. Because again, so many of these people have been calling for some of this for so long. I mean, I talked to Luke Groman, I talked to Larry Lepard, I talked to all these people, and Mark Faber, and they're kind of like, oh, wait, this is kind of the inflection point we've been waiting for. There's a little bit of disbelief. It's interesting.
Yeah.
So it's going to be wild to see where they think it goes from here. So we'll be following along with you, and I will see you next month in real life down in Nashville.
A big hug in Nashville, Maggie, and I'll buy you a drink.
I'm looking forward to it. It's going to be great. I hope a bunch of you can join us. If you haven't gotten a ticket yet, just go to tgmacro.com/conference. We'll put the link in the description and chat. I'll be back on Friday with Dale, who did call that turn in TLT and oil. I tweeted about it today. We'll get his next upside targets. In the meantime, everybody, thanks so much. Take care and good luck out there.
You're the best, Maggie.
Thanks, Tom.